In case you're just joining us, it's the morning show still. Because the Friday edition is the weekend edition. Joining me right now is my guest. He's Jide Ikeako. He is the Chief Operating Officer at Blackthorn. And Blackthorn is in Mayfair, London, if I'm not mistaken. Good morning, and thank you for joining us on the program.
Good morning.
Okay, we're talking about Nigeria's economy and foreign investment. I think the first question I should ask you should be that of, is Nigeria an exciting destination for foreign investment? Because when you listen to our policymakers, as it were, you listen to them, and the summary of whatever they're saying is that, okay, there are a lot of opportunities for foreign investment here in the country. Is it really an exciting destination?
It's an interesting question, and I think the figures speak for themselves. If you look at, for example, typically the Nigerian Stock Exchange, look at its market cap relative to GDP, and you compare it with a place like South Africa, which has about 247% market cap relative to GDP. You know, it's obvious that investors prefer that when they're coming into Africa as a sort of a soft landing, and from there they branch out into other parts of Africa. So it tends to speak for itself. Having said that, you have to look at Nigeria as amongst a basket of other destinations, and you don't even have to go as far afield as Europe or Latin America, any of the other BRICS. Look at ourselves compared with other parts of the West African Monetary Union or other parts of Africa. So you've got, for example, countries like Angola, driven by extractive industries naturally, but they tend to sort of vie with Nigeria as Africa's #1 oil producer. They're producing about 2 million barrels of oil a day on a population of 17 million. So if you look at the income per capita relative to Nigeria, it's a much higher GDP per capita. So I guess to answer your questions, the figures speak for themselves. It's exciting for some, but when you look at entry onto the continent, it tends to be led capital flows by DFIs. They come in first, and then you find commercial capital coming in after that. And traditionally what we've had in Africa and Nigeria has been DFIs leading the way. And that still predominantly seems to be the case with Nigeria. Only recently have you started getting private equity funds and hedge funds coming in on the liquid side. So it's exciting, but it comes with its own caveats in terms of the ease of doing business, etc.
As someone that, of course, you manage a private equity firm in London, how exciting is it for you also as a Nigerian? When people come to you and say, okay, fine, I want to come to Nigeria for some kind of foreign investment, what's your first message to them? Like, okay, fine, it's a good country for foreign investment, but...
Exactly. Let's start by things we've gotten right in Nigeria, and let's look at just very recent history, the last 24 to 36 months. If you look at the effect of the global crisis on us, we've had crises before, a lot more minor than what happened in '08, and our reaction to it has not, we've seen a decline in the stock exchange, but it hasn't hit us as badly as previous examples. So we got that right in a way. If you look at the domestic, there's still a lot of growth opportunities in Nigeria because Nigeria tends to be driven by the demand story. You look at lending to private sector, you're still looking at somewhere in the teens as opposed to 100% plus for OECD, and even for Dubai and other emerging countries about 64% or somewhere around those margins, 36 to 64%. So you've got a lot of opportunities driven by demand stories. So on the one hand, you do have the opportunity set. On the other hand, you have the classic, quest for reasonable assets. What assets are you going to come into, and how are you going to hedge the exchange rate fluctuations? Anytime I lose 7% on an exchange rate, or because of the cost of hedging, it impacts your net, your net investment return. So these are all issues that you have to caveat out, but it doesn't preclude, as we've seen, investment flows coming in.
Are you worried about the pattern of FDIs in Nigeria skewed towards extractive industries? Because when we see foreign investment, or when we're talking about foreign investment, most of it is in the extractive industries here in Nigeria, okay, probably followed by the communications sector that has attracted about $15 billion in the last 9 years. Are you worried about that?
I think we need to split it. Let's split our FDIs to purely financial investors and what I call strategic investors. Okay. So, for example, the Chinese would strategically come in because they're looking to sort of fuel their own growth. We have to separate that from purely financial investors, which we're totally sector agnostic. We could be in extractive, we could be in domestic demand-driven opportunities, and I think that what you're seeing has been extractive, and I don't think that the domestic demand-driven stories have kept up with that. So you're seeing a huge delta in terms of the gap, the funding gap between different slices of FDI coming in.
How much of government policies for the objective of economic development? Because there's a demand for economic development. There's also a demand for economic independence, isn't it? So how do we marry the two?
I guess, from the investor's point of view, government policy is critical. Government policy drives inflation. Monetary and fiscal policies drive a lot of the perception. Having said that, there still exists a perception arbitrage in terms of the risk of doing business in Nigeria specifically, vis-a-vis the reality of doing business in Nigeria. And I think, but it's more than just a roadshow. It's more than just advertising. Investment tends to be very, very smart and tends to be very country neutral. And I'm Nigerian, as you've pointed out. But were I to look at a balanced portfolio, the question you asked at the beginning is, would it be Nigeria? Would it be my first choice? Probably not, if I looked at it on a global scale. Probably not. And we need to be very cognizant of that.
That's why I asked you the question earlier. If a client comes to you or something, I want to invest, would you actually put Nigeria on the table, first of all?
It would come to the table specifically because if you look at emerging economies, we are driving world GDP growth. Not too many places in the world are you going to get, anything, above 5% to 7%. In some cases, if you go back to Angola 2 years ago, 16%. In some places, you're looking at double-digit GDP growth. Now, that tends to be a blanket story, and even if you slice and dice Africa up into oil-producing and non-producing, you have various macro stories. Once again, I started by saying we have gotten a lot of things right.
Like what have we gotten right?
In terms of the ease of doing business, we've tended to slide, to sort of improve on the rating scale for that. It still is difficult to do business relative to other jurisdictions.
Starting up a business, the amount of days you need to clear your goods at a port and all of that.
Yeah, they still remain challenges. However, I look at things in a relative way. If you look at Nigeria's history, just trend income per capita since 1976 through successive regimes, and you can actually see the dip for so many years, and it started coming up sometime around 1999 and has trended upwards since then. So I tend to look at things, from a macro point of view in, 10-year snapshots and etc. And 10 years in the history of an economy is nothing. It's infinitesimal. But I tend to look at the trends as opposed to the absolute. And you tend to be, if you look at the absolute, that's where we are right now. And it's not perfect, but where are we trending? What are we doing in terms of exchange rate? What are we doing in terms of credit to the real sector? What are we doing in terms of credit, to the private sector? And it's those trends that, I tend to find interesting.
Now, if we look at the up and down movement of foreign investment in Nigeria, I think we'll need to just oppose that foreign investment with domestic investment in order to maintain or achieve high levels of income and employment. So some people may say, why are we talking foreign investment here right now? The problem does not lie much in the amount of foreign investment that we get or the magnitude of foreign investment, but the magnitude of domestic investment that we can get here, the magnitude of the low and medium scale entrepreneurs to be able to start up their business and do it well. There is the ease of doing business, isn't it? There is power to support them. So why are we looking out for foreign investment?
I think they're two slightly, quite different things. I think if you look at what's happened in Nigeria very recently, I think it was last year or the year before, that PenCon actually allowed pension funds to start investing in alternative asset classes aside from liquid. So now I believe you can do private equity plays and other sort of illiquid transactions. That is new. That's a legislative move in that direction. And I think it comes with the increased understanding that we must subscribe to those asset classes in order to grow growth. So you've got domestic savings without significant channels of expressing it.